Hi guys, this is Alfred from BinaryOptionsTutor.com here today to talk a little bit more about risk management and trading psychology. It's very easy to give out hard numbers and very easy to even explain why, but I'm going to try and go a little deeper today and hopefully explain some little tips that I've found to be helpful and that I've seen be helpful with other traders in the past. Hopefully, uh, these tips will help you to apply the discipline that's needed for your trading, as well as help you to stay on point with your risk management. So, with that said, let's just jump right in here. First thing we want to talk about is withdraw profits regularly, even if they are small, and then start committing them to a recurring bill. Now, the reason that I'm bringing up a recurring bill here is often a lot of times I'll hear guys, traders who wish to replace their day job with maybe trading binary options or forex trading or what have you. The journey of 1,000 miles really just begins with one step. Uh, and what I mean by that is, before you get there, you're going to have to start putting into your mind the psychology of actually translating those digits you see inside of your account into actual profits that are helping you to defray some of your cost of living. This is going to make the trading real to you, and I believe it will help you a lot psychologically. For many years, myself and my brother worked, and we done freelance work for a guy who owned several websites and also owned a successful advertising, online advertising firm. One of his sites uh, made around 20 to 25,000 dollars a month, pretty consistently. And I remember one thing he told me is when he initially started that site, his only goal and the very first goal that he set in mind was to be able to make his car note. I forget what the car was. It wasn't even an expensive car, really, but it was his goal was to be able to get that site to a point that it would pay his car note. Now, if you apply some of that same thing, some of that same business practice, because trading is a business, and maybe you can't pay a car note, but maybe you can pay a cable bill. Maybe you can have once weekly or once monthly uh, night out dining. But in any event, what's going to happen is uh, if you're able to do this consistently and stay disciplined and apply this little tip, you're going to find that you're going to be uh, getting into the habit of not just looking at digits in an account, but actually regularly withdrawing profits from an account when you have the opportunity to do so, and you're going to be playing with less of your actual capital and ideally more of the house or the counterparty's capital. Um, so that's a very, if you can apply the discipline and actually apply it, that can be very helpful to you, and that can help you make that psychological connection uh, where trading is more than just looking at some numbers aggregate in your account balance. Another thing we want to talk about here is don't overstay your welcome and overtrade. The market undulates throughout the day, and if you find yourself at the top of the day, very having an experience of the market being in sync, don't overstay your welcome. Don't trade until the market on that day goes out of sync with some of your better trading plans. That's all I'm getting at right there. Managing your risk is not just managing the numbers, it's also managing the time that you're willing to expose yourself to risk trading in the market. Set a limit to how much you're willing to expose on any given day relative to losses. I didn't write that there, but I'm speaking of how much you're willing to expose on any given day to losses. Maybe for you, that's 5%, maybe that's 10%, maybe that's more. I don't know. This is a personal uh, component of your plan that you're going to have to come up with that you're comfortable with. But have that number fixed in your mind and have that plan of what you're going to do if you find yourself at this particular place in the market on that given day. When you can limit your losses on a day, you're going to again give the market more time to undulate and find its way to being more in sync, most likely with whatever trading strategy that you're applying and trading around. Sometimes uh, it's just uh, a matter of giving the market time to be focused on the same frame that you're actually focused on. And the last little tip that we're going to cover here is to set reward targets as well that are comparable to what we just talked about in number three. And what I mean by that is if you're going to set a risk exposure cap of 10 points on the day or 5 points on the day, 5%, 10%, whatever you decided in part three. Maybe if it was 5%, maybe you want to set your profit at 6%. Maybe you're having a stellar day, but when you've arrived at 6%, set that into your trading plan and uh, have in your mind, in your little playbook, what you're going to do if you're presented with that opportunity on any given trading day. Another thing is when if you're able to regularly take profits at let's say 6% and take uh, drawdowns, limiting them on the day to 5%. Over time, the numbers are in your favor. Is we're looking at a plan that's constructed of better, slightly better than the one-to-one risk-reward ratio, and that's going to assist you with getting to a place where your trading isn't just about the strategies, isn't just about indicators, isn't just about being wrong, exclusively right more times than you are wrong. And that's uh, also a place that you want to endeavor to get to in your trading, to trade three-dimensionally, not just looking at things from a perspective of the prices and the indicators and whatever other mojo you may bring into the market to trade around. That's really all I had to share with you guys today. If any of you have found this helpful, please help us by sharing, liking, commenting, and subscribing to our channel. Once again, this is Alfred for BinaryOptionsTutor.com.